Hello traders, this is Rich from Tradesight. This is a look at the market preview for the coming session. This is going to be for Tuesday, October 29th, 2013. We had kind of a back and forth session today where we were trying some higher ground, but ultimately really couldn't get it going to the upside in any real sustainable fashion. We were higher by 5 handles in the ES and 9 on the NASDAQ futures, but we were kind of fighting some negative internals all day. The advanced declines were slightly negative at the close, and the big thing was the New York Stock Exchange was fighting a higher VIX all day. So even when the market was trying to climb higher, the VIX was up on the day, and I think that was really the thing that was holding the market back from putting on some better prices and advancing. But without further ado, let's take a look at the major futures contracts on the charts. All right, so here's a look at the ES futures. You can see that we did climb higher on both an intraday and a closing basis. So we made a new high close on the move and a new high on the move, trying to pull away from this 8/8 level, but so far it's been pretty sticky as we were expecting. So 1750 is really kind of a draw right now, and certainly could come into play tomorrow. If we do break to the upside, next real level is going to be 1781.25. And to the downside, we're going to have some pretty good support here at the 10 EMA around 1737, and last week's low in a gap fill window at about 1730, 1731. So those are the nearby levels for the ES futures. Looking at the NQs, the NQs are still kind of gaining the risk line from the 13 exhaustion here on the Seeker study. So while the signals in place, we haven't rolled and closed back down below the 10 EMA. That's the blue line here to signal that the exhaustion warning has turned into an outright sell signal. So for now, still waiting for that to happen. Break under that 10 EMA, especially on a closing basis, is going to be very notable. If we do continue to the upside, obviously there's going to be a big pull here from the risk level. That's the magenta line where the cursor is now. And then there's going to be resistance at 8/8 at 34.37.5. To the downside, we've got the 10 EMA for support at 33.34.5. And then last week's low, or the gap window, is going to be even more important here at about 33.11, 33.12. TLTs right now are just kind of marking time. We did do a 9-bar run to the upside, but we don't have the qualifier in place for a reversal necessarily because the 8 and 9 candles are not higher than 6 and 7. If we do pivot to the upside, last week's high are going to be in play. That's going to be resistance about 108.75, and then above that 109.38 is the 6/8 level on the Murray math box. To the downside, we've got a real strong level here, which is the gap window here, which is the low from candle number 5 in the Seeker setup, and that coincides with the 10 EMA at 107.25. Moving on to the Dow futures. Dow futures are still being contained within the 8/8 level, also the static trend line. So that's a real pull here. This is the cash Dow right now. Levels are the same on both. So key resistance at 8/8. Key support is going to be at the 10 EMA at about 15,429. All right, haven't looked at the cumulative advanced decline in a while, so here's a look. The ES side, or the broad market side, represented by the New York Stock Exchange cumulative advanced decline, is still positive. We had a little minor negative day today, but we're still holding above that breakout level. A loss of that breakout level is going to be a notable development and probably get the bulls kind of actuated and getting more defensive, and the bears are probably going to start getting more proactive. That hasn't happened yet, but that's definitely something we need to be aware of. The other divergence that we're seeing here is that the NASDAQ side, represented by the total NASDAQ, is really basically just flatlining here. So even though the NASDAQ is pushing out the new highs, we're not getting that confirmation of a broad base advance here. We were negative on the advanced declines on both sides today. You can see that here in the chart. So we're definitely seeing a little bit of a divergence starting to show up here in the on the NASDAQ. Here's a look at the 10-day trend. The 10-day trend is relatively flat still, so nothing new here. Just kind of marking time here in the neutral zone. Now the S&P TLT had a positive day today with the bonds being a little bit weak. but the ratio is still below the previous high, so we're still waiting for a breakout on that. Right now we do have a little bit of a positive bias over the last couple of days, but we need this multi-day breakout so that we can take a look at taking out these highs to see some risk being put on across the board in a little bit more vigorous manner. Right now we're kind of in a rolling correction as far as this goes, and just staging underneath the high. All right, now here's the other interesting chart. This is the other risk-on, risk-off metric to go with the S&P TLT cross. This is the Dow Gold ratio, and you can see that we're kind of in this area of congestion right now, and potentially setting up this this reverse head and shoulder. It's got potential. Here would be your left shoulder. Here's the head. Got to get up here and finish the right shoulder, but we're starting to get a little bit long in the tooth here with this declining neckline. So really need to get this going and really start to see some risk being put on. Need to see gold continue as more of a source of funds, but for now, gold's actually kind of just basically hanging tough here and being somewhat accumulated. This ratio will start to rise as gold weakens and equities strengthen, but for now, that's not the case. So I'd like to see a little bit of movement here, and this flat line just kind of, I think, is indicative of the very tepid advance that we've seen in the overall markets, without a lot of oomph and a lot of broad-based enthusiasm. All right, so here's a look at the multi-sector daily chart. You can see we definitely saw a bit of a bump here in the XAU, so we still have some positive movement and some positive momentum in the gold stocks. The BTK on balance today was fairly weak. There were a couple bright points there, but we're still below the previous high here, as you can see. Pretty good action in the stocks today and a bounce. I think a lot of that will be sorted out tomorrow, depending on the reaction to the Apple earnings. The banks were also positive as well. So a little bit of risk on, a little bit of risk off, but definitely seeing some interest in the gold names for the first time in a while. All right, so here's a look at the sectors ranked from best to worst. Stocks was definitely the standout today, followed closely though by the OSX oil services. Now, the one thing to, I think, take away from the rankings today is that we got the oil services, the OSX, which is a key component of the energy complex, pretty near the top of the list. And then you've got the Dow Transports that are up about 0.4% as well. So you've got the Dow Transports and the oil services, trading fairly well, even in a kind of sloppy tape. And that could be the new leadership that the market needs and can really hang its hat on for the fourth quarter of this year. Definitely something to watch. Keep an eye on these names and make sure you're aware of where the individual charts are for the different components. Down at the bottom of the list, the internets were weak, a little high beta, flu, if you will, ahead of the Apple earnings. Netflix was weak, and a lot of the names were just kind of in a bid vacuum as some of the folks were trimming positions there. The utilities were fairly weak, and the BTK was weak too. So the BTK seems to kind of have a little bit of a problem here. We'll take a look at that chart in just a moment. The banks were kind of middling here, really not showing anything, but the BTK being weak and then seeing strength in both the OSX and also the transports is kind of your typical rotation, and ultimately they'll wind up rotating some money out of the banking index and into these later cycle stocks in those different sectors that represent the kind of the sixth, seventh, and eighth inning of the expansion or the recovery, if you will. Fed in influence as it may be. So let's take a look at a couple of the charts. All right, so here's a look at the SOX. The SOX has broken back into that gap. Traded up to the 500 level today, but found resistance there, which should be no surprise. This is a big area. The half gap fill is going to be resistance as well. That's going to be measured from the close of the 13 candle with the sell signal to the open the day after that signal. That half gap fill is going to be really important resistance, and if they can't get back up into that, these lows will then be a very, very formidable breakdown that will take the pattern down to these previous lows here at about 480, and then probably wind up putting this 4/8 level in play if they can't close this gap. Let's move on to the BTK index. BTK index is still just kind of retesting this prior high. It's actually starting to trace out kind of a broad-based head and shoulders here. Here's your left shoulder. Here's your head. Working on the right shoulder now. That's going to make this current area pretty important. This could definitely lead to kind of a breakdown in that rotational release out of the BTK into those later cycle stocks. So definitely keep an eye on this. Not that enamored with this chart right now for sure. And finally, I want to take a look at the oil services today. Oil services did this 9-bar run to the upside. 8 was higher than 6 and 7, so we got a reaction to the downside. This 4/8 level was first support. Now if we get back up here, this 5/8 level is going to be resistance, but you can see that this has a much different look than the BTK here. And definitely want to see some key support here from the static trend line and then challenge the old highs. MACD is still positive, as you can see, and has room to go here before getting too long in the tooth and too extended to the upside. All right, folks. Well, Apple earnings after the close. This is tomorrow's going to be the dawn of the 2-day Fed meeting, so we could have a little bit of a zombie market, with low volume ahead of the announcement that's going to come on Wednesday afternoon. So make sure that you don't pass on good setups in the morning. Be a little skeptical and a little bit particular about setups, midday in low volume until we get that Fed announcement, and then hopefully back to real trading again. Well, as always, thanks for listening. This has been Rich for Tradesight.